Hey everybody, Courtney Smith here with our latest Wall Street winners, the new and improved Wall Street winners. Originally started way back in 1995. Seems like just yesterday. All right, here we go, getting into October. Now, one thing to remember is that even though the most famous crashes in history have occurred in October, such as 1929, 1987, 1990, September actually is a more negative year. I think we're really past if there was ever going to be any type of a retracement here, I just don't think it's going to happen until January, and I do expect a little bit of a retracement in January. Now, this, of course, is the high point of the whole presentation. It's downhill from here. The fact that you can make millions of dollars, not as important as that you memorize this. In fact, I suggest you have your children memorize it. Okay, so the S&P on Friday of last week, I should say, made a new all-time high. But look at the purple predictor. It's starting to crap out here. It's starting to move down. The previous 2 weeks, it had accelerated and looked very good, but in the early part of this last week, it really broke down. In addition, look on Friday. Friday closed higher than Wednesday. Look at that. Friday closed higher than Wednesday, but the purple predictor closed lower. This is actually telling us that the smart money is starting to take profits up here at these levels. Over here in the Dow, similar story. You can see that the buying pressure, which is the green line, is going down. Now, the only reason why we're staying stable is because the selling pressure is not going up. So we're just kind of going sideways right now. The Nasdaq, on the other hand, look at the purple predictor. It's starting to move higher. So what we're seeing is a rotation out of big industrial stocks back into those sexy Nasdaq technology stocks and so on and so forth. Now, this is really good for our fully paid up members because, as you know, a lot of the stocks we have are those sexy technology stocks, okay? But this week, we're also adding some old Dow type stocks as well. We might get filled, we might not. We'll see. But fully paid up members, hang on. You're going to see some brand new names. All right. Seasonality is still bullish. It has to break below about 165, a little less than 165 before I'm going to pull the trigger. But we're drifting lower. These are small cap stocks that we use in our seasonality indicator. And as you can see, they are weak. They are weak. Now, you can see, here we are, beginning of October, which is the beginning, according to Stock Traders Almanac, the beginning of an explosive fourth quarter. A fourth quarter that should, according to their seasonality, should get us at least an 8% gain. That's a big gain in just 3 months. Ned Davis, also strong up move, but they've got it a little bit more choppy than Stock Traders Almanac. Okay, yield curve is really not that important right now. Also, we pulled away from a negative signal there in the lower right-hand corner. So right now, we can ignore the yield curve for now. Not down the road, but for now we can. Asset allocation was explosive the previous week, kind of consolidated this week, showing that money continues to remain being pulled out of the bond market to invest in stocks. Our stock market risk indicator remains lower. In other words, they're not looking, this would suggest that we're really not looking for Nasdaq stocks, although the last 2 weeks have shown a little bit of an increase in risk. This indicator shows how much risk the market wants to take. And you can see we used back in May, they really wanted to take a lot of risk, but it is starting to slowly creep higher again. And I think that's coincident. The dip was saying, let's get back into those big industrial stocks. They're not as frisky, but they're not as risky. Now they're saying, well, we'll take a little bit more risk. We'll take a little bit more frisk. All right. Global shares, I got to stay away from them. There's no big bull or big bear market, so who cares? Bonds finally got a rally, but Purple Predictor continues to suggest that they're going to go down. Now, remember, when bonds go down, interest rates go up. Bond key factors. We now have the bond yield is up at the top, the green line, and we just went back up to the old highs that we made back in May. The CRB is now going up. The 10-year treasuries in Germany are going up. Both of those suggest higher interest rates. Only gold is going sideways. It's not going up yet. All right, the dollar, we talked about this potential head and shoulders top. It broke the neckline. It gapped over the neckline. It dipped down to 93.50, and now it's rallied back up to the broken trend line, or neckline, to be precise. This market, in order to stay in the bear market, has to turn around and start going down right now. As in this week, it should go down. Now, that's what should happen. So if it breaks higher, that's actually pretty bullish. But right now, we have to assume it's going to go lower. Gold is still going lower. Still going lower. This is pretty bad price action, all right? I'm not short, but boy, this is bad price action. Our indicators, the top one hooked down a little bit, but still we'd have to call it neutral. Our middle one, which is the CRB index, is a little bit strong, microscopically bullish, but the bottom one, which is the US yen, is collapsing. That's the yen down there, so it looks just terrible. All right, oil, I'm much more bullish now. Several developments in the market suggest that the oil market's going to get back up to 75. Some people are saying 100. And basically what's happening is that the Saudis are keeping with the lower production numbers that they had been on. And as a result, that's caused the market. They thought that the Saudis and maybe the Russians were going to increase production, but they came out and said, no, you know what? We need the money. We'll take the higher rates right now. Even though it's on fewer barrels, we'll still take the higher rates. So this looks like we'll get to up to the old highs of 75, and I think there's a very good chance we're going to break through. And Bitcoin, gigantic descending triangle formation. Last week, the purple predictor was pretty bullish. This week's, it's pretty bearish. It's going down. It's making lower highs and lower lows over the last couple of weeks. The price action struggling to move higher. But given the gigantic formation that we've got with volume confirmation and with the weakening purple predictor, I think we're going to go back to that 5,900 level. And right now, you have to assume that it's going to break down below. A breakdown below that 58.94 level would definitely put me on the short side. All right, that's what we got. Well, I guess we don't need to talk about the September Stock Financial Freedom System. It was fantastic. We had a great time. Coming up in just a week is Option Success School. We are planning a second one. That one there is all sold out. In fact, we're oversold. We're calling people, trying to persuade them to go to one in early November. So we're opening up a brand new Option Success School in November. October 26th, of course, in Dubai, and January in Dubai. Also, please watch your, this has become incredibly popular, this special report that I put out for you. It's free. Look in your email. Send an email to support@wealthbuilderllc.com to get your free copy. It really is helpful. You read that, you subscribe to Wall Street Winners. We're updating this report every single week. All right, that's it for me. Freebies, fully paid up members, hang in there. Of course, we have more financial crisis information for you to watch as well. All right, everybody, talk to you later.